Bitcoin had yesterday in the evening a really nice pump to the upside, exactly as we were expecting it after that small pullback that we got. I got stopped out of my initial position in really nice profits, but I opened a new one, and I want to show you why I opened a new one, and I want to talk about the majority of altcoins forming a really specific pattern that nobody is talking about and that can make us a lot of money. I will be the first here on YouTube to show you that, so you should definitely stick around here. Make sure that you are subscribed to the channel, like this video, and also activate the bell so that you will never miss out on these really important updates. And now let me show you my, first of all, my new long position here on Bitcoin. So you see it's slightly in a loss. It's like $700 in a loss. We're like $30 away from my entry. So it's not the end of the world right now. Here you can see I have closed the position yesterday here in $8,152 in profit. When I set the stop loss, it should have been around 9,000, but there's always a little bit of slippage. So I made here 40% roughly. It should have been like 43, 44, something like that. But I can live with that, you know, so money is money. And profits are profits. What I want to show you here, first of all, on the weekly chart, I go from the higher time frames all the way down to the lower ones. So what I want to show you here on the higher time frames, that's what I wanted to say. So what I want to show you here is that it looks like that we have formed here a temporary resistance around $35,971. You can also say $36,000 is the resistance right now here that we need to break. And that will basically then open the doors to the other macro levels here of 37,500, $38,000. $38,000, and once we are through that, there is no stopping anymore to go here to at least $42,000, in my opinion, really quickly. What I also wanted to show you is, so if we would get rejected from here, then most likely we will come back down either to here, this underlying support, but there's not a lot, at like $33,700 approximately, $800. And if that is not holding, then we will go to the major support level of $32,000. There is a lot of buying bits down here already. I'm not saying that we have to go there, but a lot of people want to buy between $32,000 and $33,000. Let me go then here to this 12-hourly chart. So we had here our symmetrical triangle, and I adapted it now a little bit because it was not accurate anymore for me, you know, the accuracy was not given anymore. So I had to adjust it here a little bit, which is absolutely fine. So because we have still 3 touch points here to the upside, and that is key when we are drawing a downward sloping resistance line. And of course we have here a ton of touch points along the upward sloping support line. So here we are running out of room by the over the weekend. So maximum over the weekend, Bitcoin has to make a decision either to break it to the upside or to break to the downside. But right now, I believe that upside is way more likely than downside. And that's why, hence, we still have these targets here of $37,500 and $40,088. Also, if I go and measure that symmetrical triangle, then it gives us a rough target of $39,400. We came back down to test the EMA ribbon. That was exactly what we wanted to see, and that would have been for you a really good opportunity to go long on Bitcoin if you had not been long already, because I told you most likely the price will start to eat into the ribbon and then continue to go upwards. So yeah, on the top of the ribbon would have been a good long opportunity. Or a spot buying opportunity, both ways. Here on the liquidation levels, I want to show you just really quick that I actually spoke yesterday with a friend about this, who also looks a lot on liquidation levels, and we both came to the same conclusion and said it's way more likely that we go to the upside to grab all this liquidity that is stacked up here, because it's just closer to the price action. So it's less expensive for a market maker to move the price up than now try to move the price down and grab all the underlying liquidity and then push it up again. it does not make sense from an economical perspective for a market maker to do this, because pushing it up will cost them a lot of money once they have pushed it down. So it's way easier for them to let it run to the upside, liquidate all the shorts up here, and then start a drop and grab all the underlying liquidity on these long positions. So that's why, in my opinion, it makes the most sense here that price action continues to go to the upside before we see here any major pullback to like $33,000 again. Here on the 30 minutes chart, here you can see the clean breakout that we had here yesterday afternoon, all the way up to almost $36,000, $35,932. And kind of like here was where I took my profits when I saw it just going down, down, down. I was like, okay, I rather set my stop loss. When it was at 35,900 something, I set a stop loss at 35,810. So, and yeah, it got taken out, and it was a good decision to have my stop loss there. So, but now what you can see is, and that's what I want to show you here on this 30 minutes chart, is that we have temporarily some support above $35,250. And that was a key level to take for the bulls to continue to move higher. I had also pointed that out yesterday, that is a level that I'm looking for a flip. And now we have definitely flipped it, because here we tested it as support over the last couple of hours, and now we are starting to move away from it. So that is a really good sign. The MACD is about to flip bullish here. The stochastic is pointing to the upside, and the normal RSI is kind of, is pointing a little bit down, but will most likely point sideways or upwards once the price action goes a little bit higher. Here on this 30 minutes chart, I just want to show you, sorry, I actually have to make this one now green because it's support. I looked at the chart earlier and I was like, something is not right with this one. So now I know what it was. It was the color, that it's now underlying support. So, but then I have to mark out the new resistance level. Let me see, guys. The new resistance is kind of like, so here. So here we have on the 30 minutes somewhat of a small barrier that the bulls have to break to convincingly really flip $35,200 into support. But once this is flipped, we will snap really quick to $36,000. And as you can see here, we have here this upward sloping resistance line. We touched it yesterday already once. I believe today we're going to touch it again. If not today, then maximum by tomorrow. The longer we are not touching it, the higher the touch point will be in the future. So if we would touch it today, let's say we touch it like at my midnight. My midnight would be like here. So that would be at $36,300 if we would touch it by my midnight. If we touch it by the daily close, it would be almost $36,400. If we are not able to flip this above sitting resistance level in the next coming hours, then most likely we will come back down to the underlying support to gain momentum, and then see something like this happening to the upside. If you are right now not in a long position and you are looking to long Bitcoin, then just wait for that flip here of $35,500. You could have technically already entered here at the break of that bull flag. Let me also just quick show you the technical target for that bull flag. It's also quite high. So we have broken this now to the upside. So this is $36,321. So yeah, that will coincide with the touch point of the resistance later on today, in my opinion. And like I said, this can happen today, it can happen tomorrow, but I believe that we're going to see that quite soon. If you're not in a long position, there would have been your best point of entry. If we pull back to like $35,300, there you can consider taking a long position. And I would just set my stop loss. I would set my stop loss actually here at 35,164 here under this low. there I would set my stop loss just to protect yourself, you know. So if we come back into the flag, most likely we touch 35,200 and then continue to go here higher. So just make sure that you're a little bit, and that your stop loss is just slightly under the bull flag to protect your position, that you will be not stop hunted here. And then to the upside, like I said, $36,300 is the upside target. Let me see here if you would enter from where we are right now. $300. So that is a 2.6% move. If you trade like me with 25x leverage, that is a 68% move to the upside. So that's absolutely amazing. If you trade like me, like with $10,000-$20,000, that is really good money for a couple of hours of trading. Other people in some countries, they work a whole year for that kind of money. If you want to trade somewhere, do it on a BYBIT. You still get $30,000 for using my specific link here if you sign up. And also on BITGET, you still get $30,000, but only if you use here my specific link. Only with these links you will be able to get these bonuses. And also on BITGET, there is a 20% first deposit bonus on it. So if you deposit $1,000, you get $200 on top of it, but you can only use them for trading. You cannot withdraw these $200. But the profits out of the $200, that is something that you can actually withdraw. So now let's get into altcoins. Here I want to show you what I have actually found. And let us start off with the Bitcoin dominance before I get into the juicy part for today's episode. The Bitcoin dominance had yesterday a small retracement back to the upside, and now is looking to move here back into lower levels. That is what we want to see. We want here the 52.2 level to be broken, because that will then open the gates for further continuation and a lot of pumps in altcoins. And in my opinion, it's going to happen. Of course, if Bitcoin turns around now to $36,000 and snaps to $37,000, most likely we will come up here to 54.84% and touch here this downward sloping resistance line and get rejected from there, and then the altcoins will rally again. And I believe on the way to $40,000, once we're touching $40,000, Bitcoin will have broken out of this downward sloping resistance line and will potentially touch 57% here. But I don't believe that Bitcoin at any given point in the next 2 years is going with a closed candle above 57.15% on the Bitcoin dominance. I'm not seeing this happening, that Bitcoin will break that level and have a candle close with a full body above that level. I don't believe that. I believe we get heavily rejected from there, come back to this downward sloping resistance line, then go maybe a little bit sideways, and then see the dominance further dropping, while altcoins will then run like crazy. Here also on the total market cap, that includes Bitcoin and all the altcoins. What I wanted to point here on the weekly chart is that we are at a resistance level right now. So we should be careful with our altcoin positions, because if we get rejected from there, then that means less money in the market cap for the whole crypto space, and hence we're gonna see a pullback across the market. We have here a rising channel or flag, however you want to call that. I don't like it, because normally that is a sign when we get something like this, that we see then afterwards a rejection to the downside out of that resistance level. And we have to remember that is a resistance that exists for over a year now. We were the last time in May 2022 last year here in these levels, and since then we have not touched them. So that is something worth pointing out, that for a long time we were not in these levels, and that makes this resistance really, really strong here. Something else that I wanted to point out here quick is that on the other side we have broken here this resistance level of $1.26 trillion, and that was also a key level to break, because you see here, since we had broken down from this resistance area, we had multiple times touched here $1.26 trillion, and now we have flipped it, and with this week's candle actually also retested it. So if we would come back down, it will be not a really, really insane drop in the market. We might feel it in some altcoins, but it's not devastating if we come back and test this as support, bounce back up from there, and then actually continue to go to the upside and break that resistance level. Once we are breaking here 1.56, $1.63 trillion, that is where the real altcoin season and the altcoin mania is going to happen, because then there's so much money in the market that the whole market will just go haywire, and you will see again double digits in most of the altcoins through the day, popping up left, right, and center. So, but first of all, we have here to break the resistance that we are right in now with the price action. And once that is cleared, we can talk then about the next level. So I want to touch here quick on Ethereum. Ethereum is trying to reclaim here the daily open at $1,887. I believe still Ethereum is on its way to $2,000. I don't see any reason why Ethereum should not get there. But I want to point out that here is a small resistance line that Ethereum needs to break to push here in direction of $1,900 and $2,000 actually. And that is right now sitting at the weekly open price at $1,893. So if you are right now here in that long position of Ethereum, you would have technically gotten stopped out yesterday, but I would keep re-entering every time when we come back to the entry price of $1,880 once if I would get stopped out, because this is definitely going, in my opinion, here to the Fibonacci extension level of the 1.65, 1.618 of $2,041 and $2,051. And this will happen in the next 7 days, in my opinion. So mark my words, most likely next 7 days, we're going to see $2,000 for Ethereum. And I will also start now to build in Ethereum coin futures position for that. So now let's talk about the juicy part, what I have found here on most of the altcoins. I was, like I said yesterday, talking with a friend, and I saw a lot of charts that he was charting on, and that's how I discovered it. I had it somewhere in the back of my mind because I had seen it before and noticed it, but I forgot about it again. And when I saw it yesterday on his chart again, so he did not mark this out, I just caught it with my eye. So, and then I was like, wait a second, this is something that I need to tell you guys about so that you can take advantage of that. Because that, once here these levels are broken, we will see massive moves to the upside on the macro levels here on the weekly chart, for example, for Ripple. And what am I exactly talking about? So I'm talking about here, this horizontal line. And you find this line with almost the same pattern that we see here across the board in all altcoins. It varies a little bit left and right on some altcoins, but overall it's the same pattern that's emerging on all altcoins right now. And I'm going to show it to you. So here you see that this is a key level that was broken, and we had only revisited it this summer just to get a rejection from it, and now we are retesting it again. For now on the weekly chart, also here we have a rejection, but I can tell you once we are above that level and we retest this, Ripple is going to fly to $1 most likely really quick. So you see here in summer, Ripple did not care about that resistance level. It almost touched $1. It just kept pumping and pumping because of the news. Now we have not a news catalyst for it, but we will at least pump to like $86 really quick once we are flipping 73.6 cents. Not $83, $86. I meant 86 cents. We are going there really quick to 86 cents once we are above 73.6 cents. So you should look out for if we are this week or next week on the weekly chart are above that level. And once we're above that level, you can open a long position and then look here just to 86%. With a 10x leverage position, this is almost 170% that you can make here. And Ripple has the uncanny character to have these moves, these impulse moves, really fast. Once Ripple is above a key level. So we see that here also in the past. You see here, I show it to you. So we drop here into this support area where liquidity was. We shoot back up and we shoot immediately above that resistance. Price action comes back down, tests the key support level, shoots back above that resistance and then gets rejected again, and then actually came down and broke that key support level. And now we are retesting it again. If you are looking for entries on a coin like that, I like to look at least on the daily chart. I personally, I go even lower. I go to the 4 hourly to the 1 hourly chart to find entry levels. But the daily here in this specific scenario is absolutely sufficient. Here you can see we have a downward sloping resistance line, and you want to wait for a break of that downward sloping resistance line if you want to front run the move into that resistance here a little bit. Then you can enter already a long position. Otherwise, you wait until that level is broken, which is coinciding with a break of that downward sloping resistance line. And then you enter the position and trade this to the upside. So as you can see here, we have an upward sloping support line and the downward sloping resistance line, which is creating here this pattern with an apex. So here we have technically still time until February next year, because kind of here you want to see the breakout in that vicinity of the pattern. So yeah, technically we have here a month in early next year where Ripple has time to break out of that pattern. But personally, I believe we're going to see this before happening already. But I also want to give you a warning. If we break out of a pattern like that in like the middle of it, usually what happens is it breaks out. It will make it look like, the price action will make it look like that it will not come back, and it will just consolidate, continue to rally, consolidate, continue to rally. But this is not what's going to happen. So most likely what's going to happen is, if it's happening here as this example, at some point it will break down and come back into the pattern, and all this here will be a massive fake out. And that is something that you also should keep in mind when we are breaking too early out of a pattern. It's normally always a fake out. There's like a 90% chance that it's a fake out if we break too early out of a pattern like that. So I would definitely keep trading my stop losses once I get into that position here. If I would be you, for example, if we are breaking here 73 cents, and we are at 86 cents, then you put your stop loss to your entry, and then you just trail it up level by level. The next coin where we find a pattern like that is THETA. Here also on THETA, more or less the same thing. Here you can see again, we have here that pattern with that multi-month support resistance line. So here it became support. Here it became again resistance, and since then we are struggling to stay above the level. We are now above that key level, and we are going in direction of the downwards trending key resistance, which is sitting at 90 cents. Once that is broken, we will go in direction of $1, but you have also to understand there is also a resistance level here with the psychological $1 mark, which is on top of the resistance that is sitting there already, creating even more resistance, because people think about round numbers, and round numbers creating always resistance, because you think like, oh, I sell at $1, or I sell at $5. You don't think about to sell at 99.2 cents, so normal people don't do this, so normal people that are not traders, they go for round numbers, $1, $5, $10, $15, $20, 25, 100, 200. It's just human psychology that we like aesthetic numbers and not going for 98 point I don't know 447, so something like that, and we, oh, that's a beautiful number. No, nobody does this. It's just human nature. So and that's why it's a psychological mark, resistance mark, where I believe that THETA will not immediately break through it. We might gonna touch it, then we come back down to this downward sloping resistance line, then we continue to go higher into the multi-month support and resistance flip level, and potentially even touch the above sitting resistance. So if we would now break out of this, and let's say it would happen today, then we would look at a potential move here of 78 8% more or less to the upside. And if we're just looking at the the above hanging resistance at the $1 level, that's already also 10% to the upside. So here on these kind of positions, I'm trading personally not more than with like 5 to 10, 5x usually, because I want to make sure that if there is a pullback, that I will not get stopped out of my position, because on a weekly scale, coins can pull back like 20-30%. And if I only catch like 2% of the move to the upside and then it pulls back 20%, that's not really good. That's why low leverage here on these kind of positions. Again, on the daily chart, I'm looking for my entry positions. Here I see right away one. If I wanted to front run this here again before it breaks this downward sloping resistance line, I would enter at 86 cents. That would be my entry level, because it was support here. It was support there. It turned here into resistance. Here also retest as resistance, retest as resistance. And if I see a 4-hourly close or a 1-hourly close above that level, I would already enter early into this position, but with a tight stop loss. So I would set my stop loss at like 83 cents, which is like 0.4% or something. So if I trade with 10x leverage on this, I would lose like 4% of my position if I would do that. So if I would enter from this here and we trade it into $1, that would be 16.7% to the upside. Again, 5x leverage, it's almost 100%. And that is, again, a really, really quick move in my opinion that's going to happen here. Then another coin that a lot of people have almost forgotten about, that this coin is finally moving here again, is actually MATIC. Here on Polygon, you see also we have here this underlying key level that was acting for a long time as support here back in 2021. Then it turned into short-lived resistance, became again support over a couple of months. And then here in June this summer, it became resistance, had a fake out to confirm resistance. And now we are breaking actually this downward sloping resistance line in alignment with that key level. So that would be a coin that I would have definitely now on my radar for a potential trade. I'm already in a trade on MATIC. That's why I'm not opening a new position on that. But you can definitely look out for this right now. Let me go to the daily chart. See here's a clean break right now. So you can either wait for a retest at 74 cents and then it goes higher, or you enter now and you set your stop loss at like, 73 cents would be my stop loss. So you would enter at, what did I say? Pullback. Oh, it's 74 cents. So it's 75 cents, sorry, 75 cents, more or less 75 cents. That would be my entry level on a potential pullback if you want to wait for that. Otherwise, if you enter now, set your stop loss to like 73 cents. That's where I would put my stop loss. It's slightly under the downward sloping resistance line, and I would just do that because a lot of these coins, they are not going for the usual pullback that we experience in the bull market. Normally we have this. So, but right now, most of the coins are just not going for the pullback to give you an opportunity to enter the trade. So that's why you have actually to market into most of the trades right now. What I'm actually most of the time doing. So that's why for me it's not a big problem. But I know a lot of other people trade with limit orders, and for them it's a problem because they set their limit orders and they never get filled because price action just keeps doing something like this, then pulls back a little bit, maybe goes sideways here, and then goes higher, and you had your bids down here, and you never got filled because the retest never came. So, and so for me personally, it's not an issue. Like I said, I always do a market order. That's how I catch most of the trades also right now. So maybe that was a small secret of mine. If you are wondering how I catch a lot of these positions, because I just market order into the trades. I don't care about the fees that I have to pay for that. I'm rather in the trade than missing out. So here to the upside, almost also catch a move to like $1. So most likely we'll go up here to like 97 cents into that resistance area. So you can see here resistance, also here at the bottom of it, there's a distinct resistance. I can imagine to see a break into that resistance area. We just don't know where it's going to stop. It could stop at 91 cents. It could stop at 94.5 cents or at 97 cents. We just don't know yet where it's actually going to stop. So what I would do here is, if I would be entering now a position, I would just look how the price is reacting when we're entering at 89 cents into that resistance area, and just set my stop loss at around 82 cents once we are touching 89 cents. So that is still 10% away from the price action then to the downside. So you will be protected if you are trading with 5x. And the other thing is, it's kind of like in the middle, you know, from where we are at right now. So you make potentially still 50% on the way here to the upside if you get stopped out in that resistance area. If we see a harsh rejection and your stop loss gets hit, you still walk away with at least 50%, in my opinion, in profit. So it's not the end of the world. But yeah, once we are getting into that resistance area, I would trail my stop really, really hard and make it tight. What I wanted to let you guys know is, go to a lot of these altcoins on a weekly chart. Let me go back here. Look at this. Most of these altcoins, what I have found is right now, are forming in mirrored a cup and handle pattern. What I mean by that? What I mean by that is, you have on this side the handle, which is normally on this side, and you have here the cup. So it's like an inverted cup and handle pattern, a mirrored cup and handle pattern. Look out for this specific pattern. You will find abbreviations or similar formations across all altcoins, and draw in then these key flip support and resistance levels and put an alarm there, because once they are breaking there, I can tell you, altcoins that are breaking these kind of levels, they are going to fly. And that these, I give you an example, eGold, Elrond broke that resistance level on a daily close, and like a minute later it jumped 20% in the middle, in like a minute. It took a minute to jump up there, 10% after it broke here a key level like that. So, and this can happen with any other coin that is breaking that kind of key level. So definitely watch out for that. Guys, that was a really long episode today. I still hope that you enjoyed it a lot. So make sure that you smash up the like button, hit the subscribe button, hit the notification bell, and I'll see you then again tomorrow.